Hello, here from the floor of the New York Stock Exchange. Joining me now is Timothy Anderson. He's the managing director of TJM Investments. Thank you so much for joining us today here.
It's nice to talk to you today.
So, everyone is talking about the trade conflict and political things. Do you think this is like really driving the markets at the moment?
Well, I think the market clearly has a number of issues. One would be the unresolved trade issues primarily with China, but also getting the US Congress to pass the USMCA, which is the new trade agreement with Canada and Mexico. And also there are issues of potentially slowing growth globally. Interest rates have come down significantly in the last week and a half, with the 10-year note trading below 2.3%, and the Fed funds futures are really predicting a rate cut late in the fourth quarter, which would potentially send some signals of concern about maybe a slowing economy, which we're really not seeing right now. Obviously, first quarter GDP, we just got a revision today. It was quite strong. It held above plus 3%. That's probably going to be a little bit less than that the next couple of quarters.
So we just saw the earnings season a couple of weeks ago. What do you think about the US economy? Is it strong or is there a weakness?
There are some areas where there's been some weakness, both in the manufacturing sector, and also the housing market has been a little bit slower to really gain some traction, which a lot of people had been looking for this year. It still may take place, but it's been very gradual. The employment picture has been very strong and continues to be very strong, and wage growth continues to be strong. So the economy is solid, but there are a few little areas where there's some isolated weakness.
When you keep an eye on stocks, which sectors are interesting at the moment?
Well, I do think that housing is interesting because it has lagged over the rally over the last 2 years, and we're starting to see maybe some initial signs of that picking up, clearly with mortgage rates coming down to 4%, where they had been 5% for most of the second half of last year. That should be a help for the housing market. An offset there clearly is the limitation on tax deductions for state state real estate taxes, and also prices have come down, which is a positive. It's just been a little bit slow for the housing stocks to pick up, but that's an area that I'm watching. And also the heavy equipment and machinery stocks have come down significantly from their highs in the first quarter, and I really think that they're probably on a risk-reward trade. They should be much closer to their lows and very attractive on a valuation basis than they were at the highs of the first quarter.
When we try to have a little outlook to the second half of the year, do you think the markets are going up or maybe down?
I do think that the markets have some more upside potential through the remainder of the year. Now, we're one day from the end of the month of May. This will probably be, this is the first down month of the year. Market averages down maybe 4 to 5% from their highs, which is not really a big warning sign yet, because over the last 10 to 15, 20 years, it's typical to have 3 pullbacks a year of about 4 to 5%. Occasionally we have pullbacks of more than that, but to have a pullback of 4 to 5%, maybe three times during the year, is about average from what we've seen throughout the bull market. The latest leg of the bull market started in 2001, 2002, 2003. it's not that unusual to have a pullback like we've seen in May. But I do think there will be some upside still later in the year, underpinned by the strength of the U.S. economy.
Timothy Anderson, the Managing Director of TJM Investments, thank you so much for these insights.
It was so nice to talk to you.
My pleasure, thank you, and thank you for watching.